Yeah. Good day once again. Good day. Yeah, it's good to be back here. It's good to be back. Let me reduce the sound. I'm happy that we'll be talking about a new topic today. So we'll be talking about a new topic today. And that is going to be price. Price, yeah. We all know the aspect of forex market always has to do with price. Yeah, we do hear about many people talking about price and time. But today I'll be talking about price and understanding price delivery. So our topic today is price and also understanding price delivery. Okay, understanding price delivery. So we all know everything that's centered around FX market is not about just by clicking, just buy and sell. It's not about just placing positions. It's not about just doing whatever you want to do. So this topic is going to be a little bit in depth about what I've been teaching in my previous lesson, which is anatomy of candle. That is the previous concept. Because all these concepts they evolve around each other. You can't use one without understanding the remaining. And I discussed about anatomy of candle, about the open high low close and the open low high close. So today I'll be talking about price and understanding price delivery. So major traders focus a lot more about technical analysis. We don't understand the price. We don't understand how price move. We don't understand the phases where price are. We don't understand what is going on in the market presently. All we just see is just pattern, and there are logics to this thing. Now, there's nothing bad about understanding a particular pattern of this and that. I also trade patterns, but I'm also a logic trader. So I understand the logic behind what price is doing presently. So you have to understand the logic part of what price is doing presently, and you have to understand also the pattern per side. So if you see a particular pattern, you don't just rush into a pattern. Because you see a particular pattern, you have seen it over and over, it might be a trap, because price is fractal. And when we understand how price is fractal, you understand the market seeks to do whatever it has been doing for over 40 to 60 years, repeating the same pattern over and over, but in a more fractal way to trap more buyers and sellers. So we see many traders lose focus on what price is doing at a particular phase in time. So that's why I think to first teach price after the anatomy of candle, which is in my previous video. If you have not watched it, go back to my previous video on YouTube. You see it there. I've taught the first part, the stage 1, part 1 of anatomy of candle and part 2 of anatomy of candle, but there's still a lot of things to be taught on anatomy of candle. But I have to just take it step by step. So price today, now we'll be talking about price. The 3 principles of price delivery or interbank algo. Now the question you should ask yourself when you get to the chart is, what are the 3 things price is doing presently? Now the first thing is where price is at now presently. That is the current phase of price. That is where price is at presently. Because when you put your chart, what you should be thinking about is, what is price doing at the present moment? What is price doing at the present moment? Please excuse me. I don't want this to distract us. Okay. Yeah. So what is price doing at the present moment? At that particular period, you open your chart. And the second thing you should be looking at after is, where is price coming from? Where is price coming from? So at that moment, you are checking where price is at that moment. You should secondly check where price is coming from, and the third part is, where is price likely to go? So that is to say, you are factoring these three principles of price delivery or interbank algo to understand the phases of price. Do you understand now? So to understand the phases of what? Price. So, and this will, if you can understand this, the many concepts, the remaining things you need to learn, it will be so easy for you to put all together. But if you don't understand this, you don't understand price, you don't understand the phases of price, it becomes a more difficult issue. You just get to the charts, you're looking for an order block, looking for fair value gap, not considering the phases of what is going on in the market. So understand these three things: where price is at now or presently, where price is likely to go to, where price is coming from. That's the second part. So you are checking where price is coming from at that particular period, and thirdly, where price is likely to go to. Put this at the tip of your, let it be at the tip of your fingertips. Let it be at, just make sure that it is a three law you have to understand. Because when it comes to price is so fractal and so dynamic that you have to check over and over and over before you can do a lot of things in the market, before your analysis, even before starting the week. These are those things you need to look at before starting the week. And when you are trading during the week, these are those things you need to also track back on. So we're going to discuss also the three elements of what? The four characteristics that what define our trade setup. The four characteristics that defines our trade setup. The four characteristics that defines our trade setup. So I'll be talking about the four characteristics that defines our trade setup. A moment, please. So when we look at our chart, you must be able to understand the four characteristics that defines our trade setup. Now, the first characteristics is, one, we have what? The consolidation. So consolidation. And two, we have the expansion. Wow. Where did everything just went to now? A minute, please. Okay. Yeah. So expansion. 3, we have the retracement. 4, we have the reversal. So we have the consolidation, We have the expansion. Yes. Don't know what's wrong with this my gadget today. So we have the consolidation, we have the expansion, we have the retracement, and we have the reversal. So these are what defines our trade setup. These are what defines our trade setup. These are things we need to understand. Now, mostly these things are not defined by us, they are not created by us. I always like to reference ICT. ICT is one of those who has really helped me in trading, understanding the logic about how smart money and the market makers move the market. So if you don't understand something or you are looking for some things, I will recommend you to go and check some of the ICT, the inner circle videos on YouTube. They are free online. And that's why we also are trying to break it down, because most traders don't understand majorly what ICT are saying. That's why we break it down. But if you want the real information at the real form, go to ICT on YouTube and you have every information disposed at it. Just be careful what you are trying to learn at that particular period. So many traders have been taking have to take one or two to fit into their model. So I think, and ICT has really helped a lot. So consolidation, expansion, retracement, and what? Reversal. Now, these things are what defines our trade setup. They are the foundation of price delivery, or how the markets move, how the bank moves the market. It is the foundation of what? The code, the algorithm, the interbag algorithm. So, and many traders cease to face this place out because they feel they don't understand, they don't need to understand this. They just know, okay, price is retracing. What is actually defining that retracement? Or what is actually defining that reversal? Or what is actually sponsoring the expansion going on in the present market? And we don't seem to understand this, and it has become a huge problem in the world trading industry. So when you can recognize this phase, put it all together, understanding the consolidation phase, the expansion phase, the retracement phase, and the reversal phase, it's more easy for us to depict. It becomes more easy for us to depict. And I can't lie to you, when you understand this four phases of price delivery, it will be so easy for you to understand price. It will be so much easy. Now, this is just a part one of price that I'm taking. I'm going to teach more. I will create a session, another video, the second part of price, whereby we'll look at a lot of examples and look at how everything fits together. Now, when we discuss about the principle of price delivery, I said where price is at now. Now, this is what constitutes what these three principles are saying. Now, are we in the consolidation phase? Do you understand? Or are we in an expansion phase? Now, if we're in an expansion phase, now the second question is where price is coming from. Is price coming from a consolidation phase? Is price coming from a consolidation phase? Do you understand now? Now, as price is expanding, now the third question is where price is likely to go to. Now, is price trying to what? Retrace before continuing the expansion? Or is price trying to what? Reverse? And the price is likely to do just these 14. A moment, please. So price is likely to do these 4 things. Yeah. So price is likely to do these 4 things. So I need you to really understand this part. Write it down, jot it down, and understand these 2 things I've taught you. Now, I'm going to show you a pictorial video. As I said, we'll be referencing more of ICT. Yeah. Now, if you can see this, we can see price delivery. We see how it centers around these four things, that is consolidation, expansion, retracement, reversal. Now, only one what happened at the time in the market. That is, price is likely to what be in a particular phase at a particular time in market. Price cannot do two things at a time. Price can only do just one thing. So it's either price is currently retracing into what a particular region in price, and the next thing you could do is to expand. Price cannot retrace and what reverse. It doesn't do like that. That's not how price move. Price cannot what enter a consolidation and reverse. It doesn't happen like that. Like you see price in a consolidation area, then reverse is not possible. It doesn't happen like that. There is a certain way at which price moves. Price can either move from what a place of consolidation to expansion, then back to a consolidation, or price move from a what? From a consolidation to expansion, then retrace, then expand back and go back into a consolidation. Or price moves from what? A consolidation to an expansion, then what? Reverse. Those are the three ways price moves. I think I'm going more deep into this. I'm not supposed to go deep into this at the first part. So the first thing we can see is that price can move either from a consolidation to an expansion, then go back to a consolidation. Price can move from a consolidation into an expansion, then what? Going to a retracement, then coming back what? Into an expansion, going back into a consolidation. And price can either move from what? Consolidation into expansion and can reverse. So I hope we understand this part. So this is the price algorithm. That is the IPTA data, what we call the interbank price delivery. This is how it is what being structured, market centers are this. This is what the market makers use majorly in price at a particular time in period. Me mentioning there's a period out about time, but I think it's still what we just understand is price at the moment now. So now we're going to go into the first part, and this class, this video might take a while, but I'll try to shorten it. Okay. Yes. Now I think I'm beginning to understand what to do next. So now we are going to talk about consolidation. The consolidation part is what we're going to be talking about now. The consolidation. That's our first topic for the characteristics to trade it, to have a trade setup. Consolidation. Now, consolidation. Okay. Like I've explained, the consolidation begins with everything. Yeah. This begins with everything in the market. Begins with everything. Everything in the market. In the market. So, and we know the state of consolidation is where price is in a tight range. Is in a tight range. The state of consolidation. State of consolidation is market makers keeps price price in a range. You keep price in a tight range. So you will see that they will find it difficult to see very long period or stay. They are that is a decision fee price. What we always common price. Small always price or order key both buyer class keep both buyers. Oh, okay, please. Order so keep buyers check to keep both buyers in check. So so we can see here consolidation. This begins with everything in the market. The state of consolidation is when market makers keeps price in a tight range. And we know that smart money always accumulates price or orders to keep both buyers and sellers in check. Well, okay. I think we should know this, that when we see a form of equilibrium whereby price can neither go higher or go lower, it becomes an issue. It's not an issue, it's a particular phase in the market whereby we can't see an active buying market or an active selling market. Do you understand now? So I feel that when you begin to go forward, you understand this more clearly. Now, let me quickly draw an example of when you see a consolidation market. You can neither see a buyer or seller. You will not be able to see. This is the stage of an accumulation phase. Find it difficult to break through a particular range, and which creates an equilibrium. So it creates an equilibrium. It doesn't break. It just keeps going in a particular range. So this is an example of a consolidation. So I think let me show you a pictorial view also. And we're going to still go to the chart, but not in this video. So I think I need to go back. This was okay. Trying to please a minute, please. Well, okay, yeah. Now this is one of those examples ICT gives. This is a consolidation. We can see our price is ranging between this place and this place. There's no active buyers or seller. There's an active selling market. There's an active buying market. But this is a consolidation. When you know point out and still been able to date the market. Comes a level of equilibrium of percent so in the market. Sure, you know, this is you know face the market. This is how the market moves majorly. That is from the through the market opening, market to consolidate before considering any move in the market in every particular day, every particular week. This happens almost every time. So we'll be going for one. We'll be talking fashion. Pardon me, please. Yeah. Okay. And second phase is price. Second phase is same pan the expansion phase. Wow. Okay. I think I need to end this.